I mean, clearly, last month we saw a very strong print of 538,000 jobs, much stronger than people expected. Just break down what you expect on some of the headline numbers for this month.
Well, there are stiff headwinds facing this job market: inflation, rising interest rates, a very strong dollar, and yet every month this year the labour market has defied expectations with strength almost across the board, with very, very broadly distributed gains. So the magnitude of gains has surprised us, and also the breadth of gains. They've even been in industries that you would expect to be very sensitive to current conditions. So we expect to see continued strength in the labour market, perhaps a bit of a slowdown. 300,000 jobs is the consensus estimate, with unemployment staying steady at around 3.5%, and other pieces of that report are expected to be very strong. This has been the bright spot in the economy.
I guess one factor that people have been looking at for many, many months is the participation rate. Demand for labour continues to be even stronger than supply for labour. Is that expected to equal out at any point soon?
So participation was recovering quite nicely. We were seeing older workers unretiring for several months there, and those gains seem to have stalled. It seems as though the people with the highest propensity to return to the labour market have done so, and other people are not coming in. They're staying on the sidelines. It is a big surprise. Usually when the unemployment rate dips below 4%, that draws people in off the sidelines. As it gets easier and easier to find a job, more people give it a try. And that isn't happening yet, or at least the surveys aren't suggesting that it is. Of course, in this environment, it's actually quite difficult to measure what's going on. Many of the indicators are diverging. There are mixed signals. It's almost impossible that labour force participation has stayed this low with such huge payroll gains. One survey or the other must be wrong and will probably be revised in the future. And I think it's just unclear which one it is.
And what's your forecast and expectation on wage growth?
So this report isn't actually the best one to look at wage growth because it provides an average. It shows you how the average is increasing. And when you have about 500,000 people entering the labour market each month, or the workforce rather, well, you have a bit of a problem there because it's low-wage workers predominantly who are entering now, and so they're dragging the average down. There are better sources that look at wages for individuals. We had the ADP jobs report out this week that showed job gains for job stayers at around 7.6%, and for job switchers as high as 16.1%. So sources that look at individuals over time show much faster wage growth than this jobs report will.